recently surveyed businesses in this space, and what we found is that they're really still concerned about high interest rates, inflation levels, geopolitical concerns, credit conditions. So that's what's top of mind for them right now. FX volatility, can really impact a business's bottom line, definitely impact their cash flow. And so for executives, they really need to keep this as top of mind and remain focused on this as they're looking forward to 2024. This combined with things such as geopolitical risks that we discussed earlier, as well as some of the challenges that are happening in the macro environment, collectively can cause some challenges to the business. So I do think executives need to remain focused on this, especially with cash flow being the biggest, implication of the FX volatility.
Well, we expect it to be quite different from 2023, which was really defined by the fact that we saw so much stronger economic growth than the market had expected. You think back to the start of 2023, markets were worried that higher interest rates would cause a recession. We didn't see a recession in 2023, but we are concerned that we might see this in 2024. That's why our forecast is for the global growth to be about 1.95% for the year. Now, apart from a crisis period back during the GFC or during COVID, we haven't seen sub 2% growth globally. So that's why we're concerned that we will see a slowdown in 2024. Well, it's going to be eventually when we start to see the Federal Reserve, but more broadly, other central banks start to ease monetary policy. The whole of 2023, we continue to see more interest rate increases than we expected out of the US, out of the UK, out of Europe, and out of Australia. And so that's really been the defining theme this year, that stronger for longer narrative of higher interest rates. At some point, central banks will start to turn and will start to cut rates. And as we mentioned, if we do see a recession, that's when we might start to see the Federal Reserve cut rates and perhaps central banks around the world cut rates as well. And that's really where we'll see the market move into a new phase. We'll go from this period of higher interest rates into markets reacting to lower interest rates. That could see the US dollar lower, it could see the euro higher, and could certainly drive equity markets higher and bond yields lower.